How would you feel if you watched a cutting-edge, absolute pioneer asset get pulled into a harsh, multi-month falling trend, flashing clear sell signals across almost every single technical moving average, while a small group of highly passionate traders insisted it is completely undervalued? Welcome to the wild, fast-paced world of tokenized assets, where futuristic deep tech computing and decentralized blockchain markets collide. Today, we are looking closely at D-Wave Quantum Tokenized Stock, trading under the ticker symbol RQBTS, currently ranked around number 3,651 in the broader digital asset space. Right now, it is sitting at $22.51, pushing a 24-hour increase of about 4.25%. But do not let that single green day fool you into making a hasty trading move. Behind this small daily bounce lies a massive macro debate dividing the community. Is this a rare, deep value buying opportunity in the world's first commercial quantum computing company? Or are we looking at a classic bull trap designed to catch retail investors completely off guard? Before we unpack the technical charts, the order books, and the fundamental data, make sure to hit that like button, subscribe to the channel right now, and turn on notifications so you never miss an urgent update on these high volatility moves. Also, it is absolutely compulsory today to leave your comment below. Tell me, do you think RQBTS is a hidden tech gem ready to explode back toward its all-time highs? Or is it a sinking giant that will pull your portfolio down? Seriously, leave a comment right now because the algorithm needs to see where the community stands on this asset. Remember, absolutely nothing in this video is financial advice. We are analyzing the market trends, the sentiment, and the pure data to see how this plays out. Let us get straight into what is actually going on behind the scenes here. To understand why this tokenized stock is suddenly in sharp focus, we have to look at what the underlying company actually does in the real world. D-Wave Quantum is a global leader in the development and delivery of quantum computing systems, software, and services. They are famously known as the world's first commercial supplier of quantum computers, utilizing a unique technology called quantum annealing to solve highly complex optimization problems that traditional supercomputers find impossible. If major logistics firms, national laboratories, financial institutions, or artificial intelligence developers want to optimize massive supply chains or accelerate machine learning models using real quantum hardware, they rely on D-Wave's cloud platforms. The underlying stock RQBTS experienced an absolute historic run-up earlier, driven by deep euphoria surrounding the global artificial intelligence boom, major defense contracts, and massive commercial software pipeline expansions. Because of that immense global relevance, entities tokenized the stock to allow crypto traders to gain exposure to its price movements 24 hours a day, 7 days a week on the blockchain. But recently, things have taken a sharp, painful turn. The initial quantum-driven market euphoria has cooled off, commercial software deployment timelines are stretching out longer, and the market is forcing investors to face a grim reality. The asset has faced a rough patch, and that is exactly why the crypto version, RQBTS, is experiencing a tense, exhausting tug-of-war between aggressive buyers and stubborn sellers. Let us dive deep into the technical analysis because the charts are telling a very fascinating, almost contradictory story. If you look at the medium to long-term trend, the underlying asset has historically been locked in a punishing downward channel, which originally signaled strong institutional pessimism. But when you zoom into the short-term picture, the immediate momentum tells a highly dramatic story. The relative strength index, or RSI, dipped heavily into deeply oversold territory, flashing strongly negative momentum before this sudden daily bounce. This means that while sellers have been aggressively driving the price down over the last few weeks, a short-term burst of buying volume has suddenly stepped in. Right now, the asset is trapped between a key psychological support level at $20 and a major overhead resistance ceiling around $25. High volume historically came in at the absolute price tops, meaning there is an enormous amount of overhead supply, leaving a lot of traders holding heavy bags at much higher levels. A definitive break below $20 could trigger a massive cascade of stop losses and liquidations, while a clean break above $25 is required to prove that this daily 4.25% pump has actual structural legs. Right now, the short-term weakness is battling long-term horizontal structure, leaving day traders on absolute high alert. This brings us directly to the ratings and the technical signals, which are causing a massive wave of anxiety across the trading forums. While some traditional Wall Street analysts hold on to their long-term buy ratings based on the company's undeniable technological lead and commercial contracts, the immediate technical indicators are flashing sell and strong sell signals across multiple high time frame charts. Prominent institutional firms recently downgraded its stance from buy to hold, citing severe short-term valuation concerns and an ongoing slow adoption rate for quantum computing software in legacy commercial markets. Furthermore, The company has faced significant fundamental hurdles, including missing revenue guidance expectations for consecutive quarters and dealing with high operational cash burn due to ongoing research and development costs. When you combine negative technical momentum, short-term moving average sell signals, and institutional downgrades, it creates a massive, suffocating cloud of negative sentiment over the short-term outlook. So is this asset genuinely undervalued, or is it a highly dangerous value trap? The answer depends entirely on which side of the order book you choose to look at. The crowd calling it undervalued points to the massive technological moat, the recurring cloud subscription revenue, and the fact that industrial optimization and AI adjacent quantum computing demand are expanding exponentially. They firmly believe the current pullback toward $22 is an absolute gift, a natural, healthy market correction that lets smart money accumulate shares of an industry pioneer at a massive discount before the next big macro leg up. On the flip side, the bears argue that this is a textbook value trap. They point out that retail traders often get trapped in these legacy deep tech assets because they only look at the historical high prices and assume a dip automatically means it is cheap. They completely forget that slow commercial execution risks, high corporate cash burn rates, and macroeconomic uncertainties can keep a developmental tech stock depressed for a very long time. Retail traders buy the dip expecting a rapid recovery, only to watch the support level crumble beneath them. Let us break down the exact brutal risk you are facing if you choose to trade this asset on the blockchain. The first major risk is extreme, unpredictable volatility. Tokenized stocks often trade with different liquidity profiles than traditional equity markets, meaning price swings can be much sharper and faster, especially during off-market hours or weekend crypto trading sessions when traditional stock exchanges are closed. The second risk is severe commercial adoption vulnerability. Because quantum computing is still an emerging sector, if mainstream corporate clients delay their quantum migration or reduce their technology spending even slightly, the underlying company's revenue can face massive downward pressure. This is precisely why retail traders get trapped. They chase the generic hype of quantum computing and advanced optimization algorithms without realizing that long corporate sales cycles and financing dilution risks can drag the price down for months on end, regardless of how essential the underlying technology sounds. To weigh this setup properly, we need to look at both the best case bull case and the worst case bear case. The best case recovery scenario, the bull case relies on a few major things going right. First, the asset must firmly hold the $20 support level and consolidate to build an accumulation base. Next, the underlying company needs to report a massive surge in commercial cloud contracts, proving that the corporate quantum computing adoption cycle has officially accelerated. If they report a surprise positive earnings beat, or if a massive industry catalyst ignites the quantum sector again, RQBTS could easily break through the $25 resistance and rapidly target the $30 to $35 range, rewarding patient buyers with massive gains. Conversely, the worst case continuation scenario, the bear case, is quite grim and painful. If the short-term negative momentum continues to dominate the markets, the $20 support floor will shatter completely. A clean break below $20 opens the door to a rapid drop toward the next major technical support levels, potentially dragging the price down toward the $15 mark. If the company continues to miss earnings, faces harsher competition from alternative quantum architectures, or suffers from ongoing deployment delays from their major partners, the institutional sell signals will intensify and the short-term downward trend will simply continue lower, leaving late buyers with heavy long-term portfolio losses. Looking at the outlook, there is a massive confusing disconnect between the short-term and the long-term. In the short term, the perspective is highly cautious, if not outright bearish. The technical indicators, the commercial adoption slowdown, and the recent downgrades suggest that the asset could face continued downward pressure or painful sideways grinding before it ever finds a true bottom. The short-term trend is firmly in the hands of the bears until proven otherwise by a massive influx of buying volume. However, the long-term perspective offers a strong glimmer of hope for the patient investor. If you truly believe that quantum computing is the absolute foundation of the future global data economy, and that this company will maintain its early hardware advantage over the next decade, then the current short-term weakness is just noise on a long-term chart. But surviving that short-term noise requires an absolute stomach for massive risk and high volatility. This brings us to a massive critical point of uncertainty. The market is standing at a dangerous crossroads, and no one can say with absolute certainty which path RQBTS will take next. The daily 4.25% bounce shows that buyers are trying to fight back, but the overwhelming technical sell signals suggest the downward pressure is far from over. Are we witnessing the final capitulation of weak hands right before a massive institutional reversal? Or is this minor bounce just a quiet pause before another devastating leg down that flushes out the remaining retail buyers? Similar, the charts are locked in a 10 standoff, the data is conflicting, and the next major move will undoubtedly catch a lot of people completely off guard. What do you think will happen when the market opens up tomorrow? Will the $20 floor hold strong, or are we about to watch it collapse into a sea of red?